Hello, everyone, and thanks for joining us today for our conversation on what's up in insurance. My name is Franklin Manchester. I'm the Global Insurance Strategic Advisor here at SAS Institute. And today, I am joined by fellow CPCU and insurance enthusiast, Umakant Narkhede, who is the head of insurance at Infinite. Umakant, thanks for joining us. How are you doing today, sir?
Excellent, Franklin. Thank you for having me.
Absolutely. Hopefully our welcome here has been warmer than the weather here in North Carolina. So today we're going to talk about artificial intelligence and how these technologies can be used by insurers to address our problems we're experiencing. So Umakant, I'd like to jump in here in a moment, but first, can you give the audience at home a little bit about you, what you do, and your background?
Yes, so I've been serving the insurance industry for the last 2 decades. Today, I'm with Infinite. I lead the insurance segment, like you said. And over the last 8 years, I personally invested a lot of time learning, implementing AI models for customers. And in the last couple of years, I have spent a good amount of time in adopting generative AI and latest buzz about Agentic AI and experimenting a lot of use cases on those.
It's exciting stuff, and I am thrilled to see the advancements that we are seeing in the industry with the adoption of artificial intelligence and generative AI. So let's go to our first topic, which I would like to hear from you about how underwriting and pricing can use some of these new forms of data. And I'm going to start by sharing a data point with you around generative AI. Some of the research that we've conducted here at SAS shows from a global survey of insurance respondents, 92% of them are investing in generative AI projects in 2025. And we consider synthetic data a form of generative AI. Would love to hear from your perspective on how insurers can use synthetic data in underwriting and pricing.
That's a great start, Franklin. And lately I've been thinking a lot about this topic. If you see, historically, synthetic data has been kind of a parallel innovation engine in developing AI models. And we're starting to see that that would change from being parallel to a mainstream innovation engine for building AI models. And I'll go into the details as to why that would be happening because of the latest advancements in the techniques like transformer models, variable encoders, advanced diffusion models. These are improving the efficiency and the accuracy of generating synthetic data. But within the insurance context, to your question, that why and where is it being used today in pricing and underwriting those scenarios? So why, clearly, insurance being a regulated industry, right? So everything we do in insurance, we have to keep in mind fairness, transparency, consumer privacy, and therefore it is at the heart of every innovation that insurance industry would build for the organization. So take, for example, you are developing a model for pricing and underwriting, and in that you're really realizing that the data set has bias. It could be sensitive data, so you are restricted in terms of using that data because of privacy constraints related to regulations. Now, synthetic data can help you in terms of increasing that underrepresented population in your data. It can help you anonymize and protect that sensitive data. It can help you fill in the data gaps that exist in the real-world data that you capture. Now, that's one driver. The second is the cost. When you say new forms of data, we see commercial auto fleets in those products, commercial property products. All of those, there is a race to acquire massive amount of data. And literally, you would see that some of the carriers would have over 100 data points per customer being used real time to assess pricing, right? To assess risk. And a lot of the time it is very expensive to acquire this data, right? So you look at the cost benefit of that data, even if you think that it has a predictive value in buying that data. So the second aspect is really the cost. So do you have an alternative? Synthetic data plays a good role from a cost perspective as well. The third reason I would say is really, for small, medium carriers who cannot afford to really invest so much into acquiring new data, for them, this is democratizing innovation, bringing it to them a level playing field with the large carriers in terms of carrying out their innovation in the organization. So today, where we see is, for example, used in quoting, price optimization, coverage recommendations, claims fraud. I'm going beyond pricing and underwriting now, right?
Sure.
So damage assessment, these are the areas where synthetic data has been used today. Where I see the promise really holds much beyond is in new products, like cyber or parametric insurance. Even within insurance, it's very rare. A lot of the events are still rare, like natural disasters. So in order for you to develop sophisticated models that just don't rely on historical data, because that's not enough for us. We see clearly every year things are changing. So how do you build those sophisticated models using synthetic data and put that in the real world? So synthetic data has been providing, in my view, a sort of a playing ground to safely test, validate a lot of your assumptions before you put this into real world. And that's why I say that why it's moving from that parallel innovation to potentially becoming a mainstream innovation for building AI models.
I love that. I love the concept of data democratization and the use of synthetic data to create new products. Certainly, we'll keep an eye on these evolvements of synthetic data. You mentioned parametric insurance, and that actually leads me into my next topic I'd like for us to cover. So it's no secret, climate risk is evolving. At the time of this recording, we have seen the severe devastation and the fires in California, particularly the Palisades community. And you and I and others are seeing a response from the insurance community where we hope, we believe they will show up and fulfill those promises. But certainly there's been a lot of outrage and negativity regarding this fire and the community's reaction. So when you think about new forms of data, I'm going to share another data point with you. It's estimated about 400 trillion terabytes of data are created every single day. Things like photos, emails, streaming information, data from your phone. And it's thought that 80% of these data are environmental in nature. So when we consider the evolving nature of climate risk insurers' role in this, how do you believe these new data can be used by insurers to build resilient communities, address climate risk, and engage and predict and prevent type of behaviors?
Oh, that's a great question. And clearly, 2025 hasn't been so great in terms of, already we're seeing like the last 1 month, what you talked about. And adding more data points to your question, clearly 2024 became the hottest year than 2023. So we replaced it by the temperatures rose 1.5% compared to the pre-industrial era. And overall, natural disasters globally contributed to losses of 350 billion-ish globally, of which 140 billion were insured.
Oh, wow.
Less than half of that amount, right? So it's a growing concern, clearly. And it's not just impact on property, impact on human lives, and the time it takes for communities to rebuild, right? So all of those factors. I think that there are several roles that insurance carriers are already playing in this. Clearly, the first one is, like you talked about, proactive role of preventing losses or minimizing losses. And one of the responsibilities there is being able to build the sophisticated climate risk models that can be put in place. And, that aspect has been underway for several decades now. It needs to fuel with additional innovation that we're seeing today with generative AI and, like I talked about, transformer models. The second role that the insurers are already playing, but I think we need to do more of that, is being the advisor to the businesses, to the communities, climate risk advisors, that kind of role, which they already are doing with their customers, for sure, broadly with even governments, in order for us to be looking at, resilient nature of responding to such situations. And there's also a good intersection from an insurance perspective where not only do we understand risk, we also hold a lot of capital as insurance companies, right? So, therefore, you have this responsibility to continue to deploy this capital, especially in climate benefiting projects, right? Climate adaptation projects, right? So those are also tremendously beneficial in making sure that we continue to advance in taking the right measures. I think that a big progress has been made over the last several years, clearly by insurance organization, but you and I know clearly that they're also a bit in challenging situation because end of the day, they have to ensure they are in position to play the role of paying claims right on time and processing those claims. So from that perspective, you would see the impact on premiums, considering some of the new risk factors that insurance organizations have to keep in mind. But overall, I do believe that increasingly there's going to be a more public-private partnership in solving these problems. And they're not just one insurance company oriented, but really an ecosystem approach of handling it.
I love that idea. I love the public-private partnership and the growing of an ecosystem. And certainly climate risk is one of those things that we believe is going to continue to evolve, and we'll need to adopt our approach and strategies to addressing it. I do want to pivot to maybe an old problem that the industry has been facing for a long time, and that's fighting fraud. But now, because of artificial intelligence and what we are seeing with these novel attack vectors, it's estimated about once every 5 minutes a deepfake is committed, and there is a prediction by the World Economic Forum that by 2026, 90% of data online could be synthetic. So in this world of it is easier to fake a claim, create a fake photo, assume someone's identity, how do we as an insurance community, how do insurers respond to fight these novel attack vectors?
That's a pressing concern in 2025, especially after the generative AI era. It became extremely easy for fraudster to leverage those tools. It's really the race now, between insurers and the fraudsters who can stay ahead of the game. And therefore, I think adopting newer technologies is extremely important. And it needs to have, within the context of AI models, it needs to have diverse data points, multiple data points that are coming in to help you those robust models, specialized models in detecting fraud. Now, if you see the in one of the surveys, Consensus ran in the UK, where they found that 1 in every 4 claims were suspected of falsified data. And I believe they did survey some 200 claims adjusters, and I think 65% of those saw the uptick in what you talked about. Now, this is last year, which means clearly tells us that after generative AI, these tools became extremely easier for them to use. Now, if you pick top 2, the one that you talked about, the fake identities, right? Creating fake identities. Now, basically, it's like a ghost policyholder, right? So it doesn't exist. It has some real data, that fraudster had stole from internet and then mixed it up with fake data and created a whole digital footprint of that particular individual. And now you are assessing this. So when you're assessing this as an insurance company, you're looking at, okay, I need to have some sort of models that capture behavioral areas which they may not have in place, models that are much more sophisticated in detecting such kind of fraud. So you have to go out there and build an ecosystem of models, data points that can help you determine such kind of fraud. Right. Second is the false evidence, and in this case, it's so much easier to just create images and things like that, right? And those false evidence that is submitted is something called as Bedford Law. It's basically, simplistically put, there's a pattern that you would check against, and if you see the anomaly in terms of consistency of pixel on that image, you could identify that image as a fraud image.
Okay.
So, techniques such as this, of course, the use of, companies will have to go out there and buy certain data in order to make certain models, but clearly, it is not going to solve this problem with the same old things that carriers have tried in the past. And the things sort of go on. So you would see IoT-related frauds. So the other kinds of data that we think like it's great to have, but those same situations also create fraud or scams for insurance companies to look at. So it's going to be very exciting, and I always look at this scenario as the opportunity for insurance companies to stay ahead in terms of adopting latest and greatest and integrating that in the ecosystem.
It's the new arms race. Whose AI is better and faster, right? I'm going to repeat that stat you shared. 64% of adjusters surveyed found there was some form of fraud or fraudulent data in claims. So 2/3.
Yeah, they saw the uptick. Yes.
Wow. Wow. That's not a great stat.
Exactly. So, and it is sort of, such things could be universal. So, in the US as well, we see such fraud happening. And I do believe that today, although companies are gathering a lot of data, they need to build sophisticated, specialized models that can detect such fraud. Yeah. Forensic analysis is another thing that they need to bring in, which also appears to be not our skill, but we need to deploy that skill going forward.
That's the 2026 What's Up conversation, right?
I think so, yeah.
So earlier you mentioned Agentic AI, and I would like to pivot our conversation to talk about Agentic AI, but also in terms of the talent gap that we're seeing, what I'm calling the silver tsunami of the insurance industry. And an article I was reading was talking about how Agentic AI and large language models are modeling our brains in terms of patterns of decision making. And the point was being made that insurers who adopt Agentic AI in the right way, in the trustworthy way that you were speaking to earlier, would experience a leapfrog effect in adopting these technologies, meaning progress faster than they would otherwise expect to do so. Would love to hear from you. Where are the areas that you believe Agentic AI is going to create the most value while minimizing or the least amount of downside risk for insurers?
And this is an area that last roughly 18 months or so I have been experimenting with. I do believe Agentic AI is the best thing that has happened to generative AI. Without that, we would be just grappling with the thoughts of hallucinations and inaccuracies and things like that. So this does bring in more controlled way of using natural language capabilities, and the tools that are used in the enterprises today could benefit and could be leveraged in Agentic AI frameworks. So that way, you're still using your existing technology tools that you have deployed, and making the use cases much more accurate than just deploying generative AI. Now, where I see huge potential is especially, let's say, in underwriting, in commercial underwriting space. During the intake process, the huge amount of documents that needs to be assessed, analyzed from a risk perspective. Agentic AI, leveraging natural language capabilities and other tools, can be helped with extracting data, can be helped with triaging a lot of those intake submissions, and dynamically populating this into models that can help assess the risk of that particular policy and product, right? So underwriting, commercial underwriting is definitely one of the areas where it could benefit. I do think that a lot of engineering is required in terms of ensuring that you have better accuracy, because it could have compounding error because now it's agentic. And right, so I mean, there's research and analysis in terms of how the error could actually multiply and grow bigger if you're not really putting in right guardrails and human in the loop in those processes.
Yeah.
The other area definitely claims automation. Is a bright area for organizations to be experimenting with the frameworks, and I would say customer service within operations is a great area. Sales and marketing, definitely in terms of promoting right campaigns, cross-selling, upselling your products, or coverage recommendations. But all of this currently is an experimentation stage, and to see the use cases with higher accuracy and efficiency, you need to do a lot of engineering.
Yeah. I can see the Agentic AI employees running amok and need to be performance managed by my HR department in the insurance company. So certainly as a prior underwriter, someone who has made a career of making decisions, the idea that AI can make decisions and move faster is something that I've been a little skeptical about, but I'm glad to hear from your perspective that you feel it is the leap we need in generative AI to really deploy these decisioning technologies. So appreciate that.
Correct.
Perspective.
Yes, absolutely.
So we've got a last topic I want to pivot to, and it's about enterprise AI adoption, the AI-powered insurer, if you will. And at the time of this recording, there was a recent change in the administration here in the United States, and one of the outcomes of that was the revocation of the executive order on AI. And considering the market here in the US or elsewhere, do you believe that revocation is going to help or hinder AI adoption by insurers?
Well, I'll be a bit, I would say, thoughtful about responding to this question. Number one, insurance is regulated at state level, and the regulations that insurance companies have to comply with in terms of legislatures, right? Model Rating Act, market conduct surveillance, and such laws. So all of the activity done by insurers is still regulated, right? So it will be something that we'll have to continue to do what industry has been doing. Now, on your point, whether that would help, I think to a certain extent, the experimentation that happens within the insurance organization, I think it might help that cause. That you would want to experiment more, and before you put that in real world, where you anyway have to have compliance in place. So that might open up opportunities for innovation, but still, I would say in the experimentation phase for the insurance companies.
Sure.
Yeah.
Well, I appreciate that thoughtful response, and certainly regulation here in the U.S., elsewhere in North America and the globe, we're paying attention to and trying to understand the various nuances with product liability directives, EU AI Act, and other legislation. So I do want to give you an opportunity to share with the audience where they can find you. So if they have questions, what's the best way to get a hold of you?
Well, I am quite active on LinkedIn. So if they look me up, Umakant Narkhede on LinkedIn, absolutely happy to connect and respond to any questions.
Awesome. And we're connected there too.
Yes.
So I'm also on LinkedIn.
Yes.
So before we close, final thoughts, anything that you'd like to share with the audience at home about what's up in insurance, things that are keeping you up at night that you're excited about?
Well, I think for us, it's especially in today's era with AI getting prominence, huge opportunity for us. Insurance companies have huge data that can be leveraged, and it's just the beginning for insurance carriers in terms of continue to accelerate their pace. So I look forward to our partnership with SaaS in taking a lot of the offerings and solutions to our clients. I do also feel that based on today's deep dive sessions with SaaS that you're very well positioned to bring the best of SaaS to the market.
Well, we appreciate that, and I'm looking forward to our partnership too. It is an exciting time to be in the industry, and I feel very fortunate I get to have conversations with you and others on these topics. So for those of you who have been listening and watching at home, please take a moment to go to infinite.com/insurance to interact with some of the content from Infinite and, of course, our good friend Umakant. Thank you so much for joining us today. And if you go on to sas.com/insurance, you can read more about these topics as well. I'm Franklin Manchester, the Global Insurance Strategic Advisor here at SAS Institute. Thank you again to my guest, Umakant Narkhede, Head of Insurance at Infinite. We appreciate your time and have a great 2025.